A losing trade. Oof, it's painful, it's frustrating, and man, it can send you into a total tailspin. But what if you could take that exact experience and turn it from a moment of chaos into a masterclass in discipline? All right, let's dive right into this and figure out how to turn that setback into your next big step forward. So here's our game plan. First, we're going to break down the emotional trap that gets so many traders. Then we'll get into how you can spot your own personal triggers. After that, we'll build a mental toolkit to master your state of mind, create an absolutely unbreakable trading plan, and finally, lay out a clear process for what to do right after you take a loss. Okay, so first things first, we have to define the enemy here. Because after a loss, every single trader faces this internal battle, a fight against a couple of really destructive impulses. On one side of the ring, you've got panic trading. This is all about fear. It's when you bail on good trades way too early, or you get too scared to even enter new ones that fit your strategy. And on the other side, you've got revenge trading. This is driven by pure impulse. It's that desperate feeling of, I gotta win it back now, which leads to crazy stuff like over-leveraging and chasing losses. And you know what? Both of these come from something called loss aversion. It's this quirk in our brains where the pain of losing feels literally twice as bad as the joy of winning. So, just how important is the mental game in all this? Well, a lot of experts will tell you that trading success is 85% psychology. Just let that sink in for a second. The vast majority of your success doesn't come from your charts or your indicators. It comes from what's happening right between your ears. Since this is mostly a mental game, step one is simple. You have to know yourself. You need to become an expert at recognizing that exact moment when your emotions are starting to grab the steering wheel. Think of self-awareness as your own personal built-in alarm system. The absolute best traders have this amazing ability to kind of step outside themselves and just observe their own mental state. And that creates a crucial pause, just a moment to notice, hey, my heart's racing, or my thoughts are getting messy, before they make a move they're going to regret. So how do you actually build this self-awareness? Well, your single most powerful tool is going to be a trading journal. And I don't mean just for tracking your P&L. This is for mapping out your own emotional landscape. Like psychiatrist Janice Dorn says, a journal helps you distance emotions and trade rigorously. It's a game changer. Now, a really good journal goes way beyond the numbers. You start by rating your emotions on a simple scale, from 1 to 10. This gives you a baseline. Then, and this is important, you write down the physical signs. Why? Because your body often knows you're stressed before your brain wants to admit it. A racing heart, tight shoulders, those are your early warning signals. And finally, you log what was happening in the market. This part is critical because it helps you connect your internal feelings to external events. That's how you find your triggers. You know, after just a few weeks of doing this, patterns will literally start to jump off the page at you. Just look at this chart for a second. Do any of these sound familiar? Maybe a big loss makes you angry and your first instinct is to double down. Or maybe after a nice winning streak, you start to feel invincible and get a little careless. See, these aren't just random bad habits. They are predictable patterns. And identifying your specific red flags, that's the real first step to taking back control. Okay, so you've spotted your triggers. That is a huge step, seriously. Now we're going to shift from identifying the problem to actively solving it. This next part is all about building up your mental toolkit so you can master your state of mind when it matters most. Here are some tools for your mental toolkit to help you stay cool under pressure. And look, these aren't complicated. A simple deep breathing exercise, in for 4, out for 4, can instantly calm you down. Taking just 5 minutes to meditate before you start trading can set you up for success. And here's a super powerful one, emotion labeling. Just saying the feeling out loud, okay, I am feeling anxious right now, it creates distance. It puts you back in charge. The next tool is all about changing that little voice inside your head. It's called cognitive restructuring. So check this out. Instead of thinking something catastrophic like, ugh, I always mess these trades up, you challenge it, you reframe it into something constructive, like this trade is just one of many and I learned something new from every single one. You see what you're doing? You're changing your whole perspective from failure to education. And finally, you gotta reinforce that positive mindset. Before the market even opens, take a minute to visualize yourself executing your plan perfectly, staying calm. Use simple affirmations like, I am a disciplined trader. It might feel a little silly at first, but what you're doing is building a strong foundation of confidence before you ever even click a button. So, managing your mind, that's half the battle. The other half is creating an external framework that literally protects you from yourself. And that is your trading master plan. A solid plan takes all the guesswork out of the equation when your emotions are running hot. And it has to be specific. What are the exact conditions for you to enter a trade? How do you size your positions? And most importantly, what is your exit strategy, both your stop loss and your take profit, before you even get in? A plan like this is your anchor in a stormy sea. Out of everything in your plan, this might just be the most important number to remember. It's the golden rule of risk management. Never, ever risk more than 2% of your capital on any single trade. Look, this isn't about limiting your winners. It's about guaranteeing your survival. This one simple rule makes sure that no single loss can ever knock you out of the game. And to enforce this plan, you use automated orders. A stop loss is your safety net. It gets you out of a losing trade automatically. A take profit locks in your wins. And the real beauty of these tools is that they execute your plan without you having to make a split-second emotional decision. It's basically automated discipline. All right, so even with the absolute best plan in the world, losses are going to happen. It's just part of the game. So let's talk about the final piece of this puzzle. A clear, simple routine for exactly what to do in the moments right after you take a loss. Think of this 3-step routine as your emergency circuit breaker. It stops one bad trade from turning into a disastrous day. First, and this is non-negotiable, take a break. Get up, walk away from the screen, and just let the emotional storm blow over. Second, open up your journal. Treat that loss like data, not like a personal failure. And finally, go backtest your strategy. Remind yourself that even though this one trade didn't work out, your overall plan is still solid. This rebuilds your confidence in the process, not just the last outcome. When you really get down to it, this whole thing is about a fundamental shift in how you think. It's about seeing every single setback not as a failure, but as a stepping stone. Every loss, when you handle it the right way, becomes a lesson, a piece of tuition that builds stronger discipline and a better strategy for the future. So I'll just leave you with this one question to think about. After all of this, is your psychology your biggest risk, or could you turn it into your greatest edge? The choice, and now the tools to make it happen, are all yours.